Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we are going to be talking about price adjustments from Tesla. We've got some increases and a decrease. We'll also take a look at inventory trends following the adjustments to the EV tax credit last week. We also have a couple updated analyst notes and a few other items as well. Quick look at the stock. Relatively strong start to the week for Tesla, finishing up the day 2.5% to close at $194.76, while the Nasdaq was down 1% on the day today. I think the strength most likely a continuation to the reaction of the EV tax credit changes last week, as well as the ruling finding no liability in the shareholder lawsuit of Elon Musk and Tesla. That was Friday after hours. Looking at the calendar for the week ahead, it should be a relatively light week in terms of macroeconomic reports, but we do have Fed Chairman Jerome Powell speaking tomorrow. That happens sometime around noon Eastern Time. That'll be an interview from the Economic Club of Washington, D.C. Since we just heard from Powell last week, hopefully nothing too major from that. And then we may also be hearing from Ron Barron on CNBC tomorrow. Usually that involves some Tesla conversation. That information is coming from a comment from Jim Cramer on a program today, where he was talking about favoring Tesla over Ford and GM. So he said Ron Barron will come on tomorrow and talk about how it'll go to 1,000. I think he was saying it literally. Maybe that was a figurative reference, though, to Barron just coming on in the future and talking up Tesla at some point. A couple more quick items on the stock. We do have updated price targets and analyst notes today from both Wedbush and RBC Capital Markets. Starting off with Wedbush, they've increased their price target on Tesla from $200 previously up to $225. This is partially attributed to surveys that Wedbush has done in the China market, which we had already talked about on Tesla Daily previously. Wedbush says, quote, "While China demand was a headwind for Tesla in fourth quarter with the lockdown and macro uncertainty, we are now seeing a noticeable turnaround for Chinese EV buyers favoring Tesla versus domestic players, BYD, NIO Xpeng. The price cuts have swayed 3 of every 4 EV buyers in China based on our survey work in China, and Tesla's unmatched ability to scale its production operations in China are meaningful to margin stability, which are front and center for the street," end quote. As for RBC, alongside their updated note here, they have actually transferred analyst coverage of Tesla from Joseph Spack previously now to Tom Narayan. Always pretty interesting when those changes happen. It looks like Narayan is starting off pretty bullish on Tesla. They've increased their price target from $186 previously now to $223, saying, quote, "Tesla is demonstrating they can spur demand growth while maintaining margins above 20%, a positive for the near-term and long-term outlook. Competition is responding, Mach-E, but we do wonder about the long-term sustainability of competitor price cuts given more challenging profit margins," end quote. Of course, we talked about that last week when Ford highlighted the difficulties that they are having on profitability for their EVs currently. We'll talk a little bit more about that later. All right, moving into the big news for Tesla over the weekend, that was Tesla wasting no time in reacting to the EV tax credit changes. Tesla has responded by raising prices on the Model Y, and then we do have a minor price cut on the Model 3. So looking at our handy dandy price change table, we can see that on February 4th, Tesla increased the price of the long-range Model Y by $1,500, so now to $54,990, while the Model Y Performance saw a $1,000 price increase to $57,990. As we have talked about, this is the second price increase for the long-range Model Y in as many weeks. There was a $500 price increase on the 23rd of January, so cumulatively now $2,000 higher than the pricing after the big price cuts we saw in the second week of January. I think the shorter range 4680 Model Y is still starting at $52,990, so a couple $1,000s cheaper than this. Tough to say though, as it is becoming more difficult to find those in inventory, which we'll also talk a little bit more about in a minute. For the Model 3, the only price change was to the rear-wheel drive standard range vehicle. That has been reduced by $500, now starting at $43,490. So talking about these price changes, I think for the Model Y, maybe a little bit lower than people would have expected given the change to the EV tax credit structure. But we also have to remember, as we had talked about on Friday, that that structure does change again in March when the government clarifies guidelines around battery minerals and components. We'll have to wait and see, but that could cut the credit in half. And by now, many orders that Tesla is taking for the Model Y are targeted for that sort of a delivery time frame. So Tesla needs to be a little bit careful about raising the price too far. And then if that credit does get halved, how does that order rate change? You probably have a lot of people that are trying to sneak in before any changes could happen. So you could have a demand bubble that turns into a demand pocket before things stabilize after that. Plus all the macroeconomic volatility. Tesla can forecast these things, but they are difficult to forecast. I think Tesla probably wants price stability that's beneficial for many reasons. So while they pretty obviously needed to increase for the Model Y after these changes, they want to be a little bit cautious about overdoing it because of these reasons. As for the price reduction on the rear-wheel drive Model 3, it is definitely worth noting that in the initial price cuts, this version, this trim, was the least reduced. It still saw a $3,000 price cut, but that was much less than other vehicles and trims. And since the beginning of 2021, it's still $5,500 more expensive, 14% since that time. And of all the Model 3, Model Y trims, that is the highest increase since that period. S and X a little bit higher relatively, but those obviously had the refresh in that window. So in that context, I think it makes a lot of sense that this would be the trim that saw a further cut. And I wouldn't be too surprised if throughout the year we continue to see that happen again. Definitely a lot of these vehicles still available in inventory, and then you also have the looming guideline changes that could affect the tax credit on this vehicle in March as well. Remember, these are lithium iron phosphate battery vehicles, so this one particularly at risk with those changes. Probably also worth mentioning the price increases on the Model Y. That should make the Model 3 a little bit more compelling relatively. Not everyone is cross-shopping those, but certainly some people do. I was definitely in that boat. So to an extent, Tesla can kind of control the mix there a little bit by how wide of a gap in prices those two vehicles have. Increasing the Model Y, lowering the Model 3 definitely widens that gap pretty significantly. Last point on the price changes, although we did see adjustments for the Model 3 and the Model Y, indicating that this is a time that Tesla was making updates, we didn't see any changes for the S and the X. So if you interpret the small adjustment on the Model 3 as a little bit of a negative for Model 3 demand for that trim, then by the same token, you kind of have to look at the Model S and X and say, okay, if there was no price changes there, no reductions, the same logic applied there would mean that demand is looking okay. I'm not sure that's 100% the right logic to apply, but it is interesting nonetheless, given the inventory trends that we've talked about a little bit for the S and the X after the price cuts. Speaking of inventory, I do also want to take a quick look at that. Inventory has continued to trend down. It looks like there are about 1,000 vehicles listed right now in the US for Tesla. But most notably, the decline has been in the Model Y. Barely any inventory available there, just 39 vehicles listed as of today. That's down from over 1,000 less than a month ago. So no inventory, price increases, demand definitely looking strong for the Model Y. For Model 3, things have been relatively stable in inventory, I think, which is good since we had seen a little bit of an uptrend there. Model S, relatively stable, even a little bit of a downtrend. And then X, a little bit more volatile, but at least not the steady uptrend that we had been seeing. All right, one last thing to mention on pricing and inventory, then we'll move on. Tesla is highlighting on their homepage now that Model 3 leasing is now starting at $349 per month. I think they had been advertising $399 a month after the price cuts initially, but it's a pretty good offer for a lease, and Tesla highlighting it on the homepage shows that they are trying to push demand a little bit at least in that direction. A couple of other quick updates. We did hear from Elon Musk on the status of FSD Beta version 11 over the weekend. He said, quote, V11 has been tougher than expected as it is a more significant re-architecture of neural networks, plus many more neural networks replacing C++, hoping to ship V11.3 end of week, end quote. So we'll see. I don't think I even need to tell anyone to not get their hopes up on V11 at this point. The delays on this have been continuous. I think when this does end up getting released, we're likely to see some regression, at least in some areas early on, but hopefully it's an architecture that allows Tesla to continue to progress and drive the rate of improvement more quickly. As we have talked about before, it's definitely exciting to see neural networks starting to creep their way into the planning stages in addition to perception, but it's going to take time to learn about that and fine-tune those things. Next, over to Giga Berlin, there have been some drone sightings of blue Model Ys starting to appear outside of Giga Berlin. So far, we know Berlin has only been producing white, black, and then more recently, the Quicksilver as well. So maybe they're also starting to get blue up and running at the new paint shop. Although it does look a little different in this lighting, I do think this is the traditional deep blue metallic paint that we have had elsewhere, rather than another new color. Also, just as an FYI on Berlin, Tesla's Europe Twitter page today posted a Giga Berlin drone fly-through. It is really incredible if you haven't seen it, but I do think that this is the same fly-through as was posted a year and a half ago or so, but didn't want to omit that since Tesla shared that again today. Next up, I mentioned earlier in the episode that we would talk a little bit more about Ford and their profitability on EVs. Mentioned this a little bit last week, but Ford did share some additional details on their earnings call about the specifics of their EV profitability and part of why they struggle with that right now. Jim Farley saying, quote, "We didn't know when we designed these first three products, we didn't know that our wiring harness for Mach-E was 1.6 kilometers longer than it needed to be. We didn't know it's 70 pounds heavier and that's worth $300 of battery. We didn't know we underinvested in braking technology to save on the battery size. We didn't know that we needed the world's best aerodynamics to get the size of the battery smaller." End quote. Now, some of those things, especially the last comment on aerodynamics, which is something that we've talked about on Tesla Daily since the very beginning, and I'm not an engineer or anything like that, so some of these things should be fairly intuitive, and it's kind of ridiculous, but at the same time, this is part of learning. You learn by doing and making mistakes and figuring those out and correcting them for the next time. So I think you'd rather hear comments like this from Ford that at least made the effort and is trying to learn and figure it out than the comments that we've heard from companies like Toyota, though admittedly that's about as low of a bar as you could set. The question for companies like Ford that want to take EVs up to the next level is if they're just going to take those learnings that they've had from this iteration, or if they're going to have some more foresight and say, hey, we need to try to be where Tesla is going to be at in 3 years instead of where they're at last year. If Ford would have done that the first time around, then they're probably not making comments like this on their earnings call in 2023. In 2026, 2027, are we going to be sitting there listening to them saying, we should have used castings, we should have used a structural battery, we should have been making bigger and better investments in autonomy 5 to 10 years ago? I think comments like that are very likely. All right, last couple of things. We've got a report from Bloomberg late last week that Rivian is working on developing an electric bike. Bloomberg says, according to their sources, this was mentioned by Rivian CEO at a company-wide meeting. I'm sure Tesla has worked a little bit on this too. We've seen renders of bikes pop up in various Tesla press things before. So just like with Tesla, doesn't necessarily mean we'll see this from Rivian anytime soon or ever, but probably a little bit more likely with Rivian as it does fit their outdoor adventure type of brand aesthetic. So it'd be interesting to see that. And then finally, just a quick update on Twitter. There had been some conversations about whether there needed to be a US government investigation into Elon's purchase of Twitter, particularly due to foreign investment. Never really made much sense because those foreign investors that were a focus of that conversation had already been invested in Twitter and rolled their shares. So it was kind of nonsense, but nevertheless, the Washington Post reporting that the US Committee for Foreign Investment does not intend to formally investigate the deal. All right, as we head into tomorrow then, just a quick reminder that tomorrow is the day where the FCC extension on confidentiality should expire for Tesla's radar. So I don't know that we'll see anything for that tomorrow, but we'll keep an eye out for it. But that's it for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Tuesday, February 7th episode of Tesla Daily. Thank you.